Feeling the pain from the trade war. Economists are forecasting a global slowdown in 2019, but the White House is predicting a brighter outlook. Take a listen.
And right now, if you look at the growth forecast for next year, we're once again at 3%. The data continue to be strong, that there's a lot of momentum going into next year.
Here now, Dan Mitchell, Center for Freedom and Prosperity Chairman. Good to see you. So we had Kevin Hassett saying that there are more upside risks. Yes, there are downside risks, but we're still looking at 3% growth this year. That's still the best since 2005.
If we get 3% growth, I'll be happy. But keep in mind that economists are lousy forecasters, and that's not an ideological point. Doesn't matter what type of administration you have. I think there are significant risks, not only externally, China debt, Italian fiscal crisis, but also Trump, I think, with his trade stuff is really destabilizing the economy. And there's one other thing, although I don't blame Trump for it. We've had years and years and years of easy money policy from the Fed, and I think that's what's creating a lot of volatility in the market right now.
So, Dan, what's your outlook then on economic growth? We're not growing at 3% this year?
Oh, we're doing fine right now. The question is, are we in the tail end of a bubble? Economists don't have 2020 foresight. We don't even have 2020 hindsight. All we can do is recommend the policies that will help. I'm very glad for some things Trump has done. The corporate tax cut is very good news. We've had some deregulation. That's good news. But he's been weak on spending and the trade stuff. I mean, if he pulls the U.S. out of the WTO or he does this so-called Section 232 tariffs on automobiles, those are potential big landmines for the economy. That's what I do worry about.
Now, you said we're weak on spending. Are you talking about consumer spending or are you talking about government spending?
No, I'm talking about Trump being weak on government spending. I mean, take this current border wall fight. If you go back to FDR and Harry Truman, when they wanted additional defense spending for World War II and the Korean War, they at least proposed to cut back on domestic spending. Trump is just rolling over for the porkmeisters on Capitol Hill on domestic spending.
Yeah, but some would say, you know, part of the fiscal package is cutting taxes, and that's why you're looking at a $1 trillion deficit year over year.
Well, there's no question that this tax cut will lose some revenue. To me, that's not an argument for not doing the tax cut. We need that for competitiveness. My argument is that he needs to also marry the tax cut with some restraint on the growth of government. We don't need anything radical. If you simply limit government spending so it grows 2% a year, you can actually balance the budget in 7 years, have plenty of room for the tax cut.
Well, okay, this is a mark-to-market administration. Their argument would be we wouldn't see double-digit gains in the stock market since Election Day if we didn't have the juice, if we didn't have the spending and the tax cuts and the deficit spending that we saw.
Well, first of all, I don't think government spending is juice for the economy. Every dollar the government spends, it's taking out of the private sector, either through taxes or borrowing. Yes, the corporate tax cut, the administration is right on that. That was incredibly helpful, very long overdue because we were so out of whack with the rest of the world. But I really think, let's set aside, of course, the issue of trade. On fiscal policy, they need to control the growth of government, and Trump has not done that. Even when Republicans totally controlled Capitol Hill, they never got around to being serious about spending, and that's going to come back to haunt them if they want to make the tax cuts permanent, because the individual stuff expires at the end of 2025, I believe it is.